Hello, and welcome to Markets in Focus. My name is Joe Bell, and today I'm going to walk you through some of the most interesting financial market themes that I'm observing. So we just finished up the second quarter. So far in 2024, US equity markets have been very strong, but let's take a look at equity market breadth. That's the overall participation by stocks throughout the market. It has been very weak, especially in the second quarter. US equity market valuations, S&P 500 near an all-time high. Valuations are really stretched relative to history, but I get this question a lot, given the strong mega cap, large cap performance that we've seen, some names like Nvidia, Microsoft, Amazon. How does this compare to the technology bubble? Well, not quite as expensive. Okay, so on the chart here, we have the S&P 500 price index in the orange. As you see, it made a new all-time high in the second quarter. It's pretty close to an all-time high at the end of the quarter. But in the blue, we also have something called the percent above 50-day moving average. What that simply does is it takes all the 500 stocks in the S&P 500 index, takes a look at their 50-day moving average. That's simply just the last 50 days of closing prices for that index and average. It kind of smooths out that trend. And when a stock's above that moving average, pretty much considered to be in a short to intermediate term long uptrend. If it's below the moving average, we would consider that to be in a short or intermediate term downtrend. Well, take a look at that. It has been declining in the face of the rally, and less than 50% of the stocks in the S&P 500 are actually above the 50-day moving average and in short-term uptrends, despite the S&P 500 being at an all-time high. That is to say, there's not a lot of stocks, especially when you look even outside the S&P 500, S&P 400 mid-cap index, the Russell 2000. A lot of small mid-cap companies actually finished in negative territory, down as much as on average, between 3 and 4% for the second quarter. Not a lot of participation with those large cap names. Now, with the momentum from the S&P 500, let's take a look at some valuation ratios. Okay, we have the price to earnings ratio, the price divided by the trailing 12 months earnings of companies within the S&P 500. We have the price to book value. We have the price to cash flow. That's the trailing 12 months cash flow ratio, and the trailing 12 months sales price to sales. Different ways of looking at valuations. And you can see currently all of these ratios are much higher than their 30-year averages in the dark blue. But even more important than the absolute numbers, take a look at this. I went back and looked at, since 1994, the past 30 years, the current ratios for those four respective valuation ratios, the current numbers that I just showed. What percentile rank are they? So for example, at the bottom there, the price to earnings ratio is at 88 percentile. That means at the current price to earnings ratio, 25.6, the trailing 12 months price to earnings ratio is higher than 88% of the readings over the past 30 years. That's pretty expensive. Also, take a look at the price to sales ratio, for example. The price to sales ratio for the S&P 500 index is currently higher than 96% of the readings historically over the past 30 years. What's that mean? It means equities are very expensive relative to the earnings of the companies over the past 12 months, especially compared to history. Doesn't mean the market's going to go down anytime soon. Valuations as a short-term timing tool have historically been very bad, but it does mean from a longer-term perspective, we may need to ratchet down expectations for the type of growth that we've been experiencing over the past couple of years. Now, I get this question a lot. With the strong outperformance of large cap technology names like Nvidia, like Microsoft, and some of these big cap names, they have been dominating the market in terms of performance. How does this compare to the tech bubble? The last time we saw this type of large optimism around the technology sector, well, it doesn't. And here is one example why. When you look at the forward 12-month price to earnings ratio, right? This is the same ratio I just showed, but instead of looking at the past 12 months earnings, this looks at the next 12 months expectations from consensus analysts. And the forward price to earnings ratio for the top 50 largest companies in the S&P 500 back in March 2000, ahead of the bursting of the technology bubble, that was at 45. Prices were trading 45 times higher than the expected earnings in the next 12 months. Today, just south of 25. Not cheap, very expensive, but not as expensive and not as optimistic and frothy, if you will, as we experienced during the technology bubble. It also was much more widespread. You saw small and large cap tech companies getting bid up back then. Right now, we're not seeing small mid cap companies perform very well, even in the technology sector. Also, July 4th, this weekend, I hope everybody has a great July 4th weekend. You obviously probably experienced the fireworks and the parades on Wednesday and Thursday of this week. Some people taking a long weekend, so I hope everybody is safe and having a good time with family and friends. But upcoming in the next few weeks is the Summer Olympics. And Al Michaels, his picture's here, but he is not going to be announcing it, but his voice will be. NBC announced that AI software is going to recreate Al Michaels' voice to deliver daily 10-minute recaps of the Olympic Summer Games starting on July 27th. This is going to be on their streaming Peacock network. So they're kind of using this news and sort of marketing ploy to attract users to their streamers. Al Michaels, not sure how much you get paid for AI to use your voice, but they did say he received some compensation. He's all on board. It will be interesting to see Mr. Robot Michaels' AI voice, see what he has to say and how that works. And they're going to look to be unveiling that at the end of July. With that, I want to thank everyone for watching, and I'll see you next time.